So, you're waiting for the best trading setups. For example, price has to be an uptrend, moving average has to slope higher, price comes to an area of support, MACD ticks up, RSI is oversold, you get a bullish hammer, and then you take the trading setup. But I'm here to tell you that if you only wait for the best trading setups, you're actually leaving a lot of money on the table. And in this video post, I'll explain to you why this is so. I'll explain to you why by waiting for the best trading setups only, you're actually making yourself a less profitable trader. And I'll share with you what you should do instead to increase your profitability as a trader. Okay, so imagine that you have two types of trading setup. The first kind is the one that you define as your best trading setup that wins 80% of the time with a 1 to 3 risk to reward. And the second kind of trading setup is a decent trading setup, wins about 40% of the time with a 1 to 2 risk to reward. However, the information here that I've provided is not completed because what I failed to tell you is their frequency of trades. So for the best trading setups, because it's the best whereby you're waiting for all the stars to align, all the factors to come together, in a year, you only get 5 setups. Meaning, for each year, you can expect to have the best trading setups to happen 5 times. Whereas the decent trading setup is a decent setup after all, and it makes money over the long run. It happens 200 times in a year. And from this, you can actually determine which setup is actually more profitable over the long run. So let's do some simple mathematics. So let's assume we are risking 1% on these 2 different trading setups. So for the first one, the best trading setup, say for example, you only have 5 trades a year. So out of the 5 trades, you will win 4 trades because you win 80% of the time. And each trade will make you 3% because it's a 1 to 3 risk to reward. So 3% plus 3% plus 3% plus 3% minus off 1 loser, 1%, and you get off a net gain of about 11% for the year. Whereas the decent trading setup, you win 40% of the time with a 1 to 2 risk to reward, but you have 200 trades a year. So 200 trades a year and you win 40% of the time is equivalent to 80 trades you win and you lose 120 trades. So you win 80 and you lose 120 trades. But because you win an average of 1 to 2 risk to reward, is actually a gain of about 160%. 80 times 2, which is about 160%. And you minus off your losses, which is about 120% because you're risking 1% on each trade. Your gain for the decent trading setup is actually 40%. So you can see that between the two, a best trading setup and a decent trading setup, you can see that they offer different profitability for the trader. You can see this. And it's not wrong to take the best trading setup, but you have to understand that by waiting for all the stars to align, for all the factors to come in your favor, you will greatly reduce the frequency of your trades. And by reducing the frequency of your trades, it is going to have an impact on your profitability as a trader. Compared to a decent trading system, a decent trading setup that has more trades, but their win and risk to reward, they are not as good as the best trading setup. But overall, they can still make more money than the best trading setup in this example. So what is my point? My point is this, is that do not ignore decent trading setups and only wait for the best trading setups. If you're always waiting for the best trading setups, the A+ setups, then you're actually putting a lot of money on the table. Right? Because there are other trading approach that may not have such a high win rate, but they still can make you money over the long run. So this is a key takeaway. So I would say, if you want to trade the best trading setups, it is not wrong. But also employ different trading strategies into your trading. And this way you can actually diversify away your risk and increase your profitability as a trader. So do not focus just on the best trading setups, but rather focus on trading strategies that actually provide an edge in the long run. It may have a lower winning ratio, it will have a poorer risk to reward, but if it has a positive expectancy, then it's a strategy that you definitely want to consider as well. So I hope you find this video post useful. So if you have any comments, any questions, just feel free to let me know in the comment section below. So with that, I wish you good luck and good trading. I'll talk to you soon.